Good to be back. It's been a very interesting year in uranium, and recently was at the Bank of Montreal mining conference in Hollywood, Florida, where over 2,000 attendees were in attendance, which I think is an all-time record. And I think it's a good reflection of the growing interest, the returning interest is probably the right way to say it, in mining. And I think the thing that I found interesting about uranium was when I went 3 years ago, uranium did not get any stage time. And when I went 2 years ago, I was invited to be on the 7 a.m. breakfast panel meeting. Nobody shows up. And this year, we were invited to be on the 12:30 lunch Yellow Cake Cafe with Cameco. So I think that's a good reflection of the growing importance and interest amongst institutional investors.
John, good to see you. I can appreciate that update. I didn't get to catch you up in Toronto. I think you were busy still dealing with things down at BMO or post BMO as well. Look, I want to talk to you about that mood. You talk about it as a positive mood and the kind of moving sentiment towards uranium when you're down at BMO. But there's also a little bit of confusion in the marketplace at the moment. We've come off these highs of whatever it was at the beginning of this year, $106 on the uranium spot. Back down to the sort of mid-90s. Some people are going, well, is this it? Is this as good as it's going to get? What do you reckon?
I think we are experiencing a corrective pause, and that's it. I think people have to keep in perspective. We had a pretty big move from $60 in September up to 105, 106, and now we're back in the low 90s. So it's been a very healthy move. What I am surprised by is given the announcements we've seen this year, predominantly from Kazatomprom, that they have simply gone from, we're going to flex production by 8 million pounds this year to, change of plan, you're getting no extra pounds. It's a bit mind-boggling to us that the price of uranium is basically where it was on December 31st, having that key fact hit the market. So I think there is definitely some anxiety, some confusion in the market because, some of the messaging we're getting from the key producers is really unclear in terms of what are the real issues. What does the production profile look like, not just for this year, but for next year? Going back to Kazatomprom, they would typically at their March analyst call announce the 2025, the year 4 production. And they recently announced that this Friday, March 15th, they will not be providing any 2025 guidance, and it will be coming in August, which is another kind of example of investors not getting clarity on what the production profile, is looking like, which obviously has a big impact on price in the short term and sentiment.
Well, absolutely does. But it kind of reminds me that perhaps not everyone likes these high prices right now as well. I'm not getting conspiratorial. I'm just saying who wants to pay more than they need to. Do you think there's an element of that in the marketplace where perhaps everyone's taking a breather, not just investors, but everyone's taking a breather and saying, well, actually, I'm going to stop buying and sort of step back and see what happens?
We definitely think that there is an element of a bit of a buyer's strike going on right now. As I said, the price, moved up week after week after week. And I do think some parties that were buying pretty consistently last year have definitely stepped to the sidelines, which has created a bit of a vacuum. And that's, I think, allowed the price to come down. But at the end of the day, you're only kicking the can down the road. You still have uncovered requirements, whether the price is $90 a pound or whether it's $200 a pound. You need to cover your book in terms of future requirements. And I think that's one of the things you have to just keep in mind, that at the end of the day, fundamentals will rule. Yes, we hit these pockets where we got to go sideways. I've always believed that the uranium price was going to follow kind of a staircase kind of pattern. And that's what's been playing out for the last 3 years, where we've, broken from 30 to 40 to 50 to 60 to 70 to 80 and so on. And it needs some time, I think, to base and to consolidate around each of these kind of staircases.
Okay. And what do you think that looks like? Sorry. What does that mean in terms of how wide are these staircases? How long do we wait? I like these kind of breathers and pauses to just stress test pricing along the way. Nothing wrong with it, as long as I feel that there's a lot of stairs to still to climb. So how do you think the next couple of weeks plays out?
Well, the next couple of weeks, I mean, the only meaningful piece of information we're going to get maybe is from Kazatomprom, and they've been pretty cagey with information. So it's really hard to say. But at the end of the day, utilities are active in the term market. We don't always see it because many of those contracts are not public. Some of them are. We see lots of RFPs in the market. There was an RFP in the market that was spanning a 15-year time horizon for about 20 million pounds of uranium. So there's some pretty sizable contracts with very long tenures out there as utilities are trying to find long-term security of supply. The spot market obviously is a little bit more fickle. Utilities have clearly decided to shift more of their focus on the term market. These staircases, we've seen in the last couple of years, they can last several months. It's quite normal. I do think it gives people an opportunity that missed the earlier moves in uranium a chance to get in. I mean, we talk to institutions all the time that kind of kick themselves and say, we kind of missed it so far. And when you get these pullbacks, it gives them, some reason to think about, okay, prices just pulled back and maybe there's a good entry point here. So I also think what's happening is we're getting some rotation of shareholders, meaning investors that were early 2, 3 years ago, 4 years ago. Some of these folks are taking profits. They're taking some money off the table. I'm not saying they're blowing out all their positions, but they're clearly taking some profits. That is allowing other investors to kind of come in. So some people might say, well, gosh, there's all this, people are selling out of the fund at equivalents of 80 or 90 or $100 a pound. But guess what? Somebody's buying their position at 90 or $100 a pound, even though, they've missed the first $60, the last $60 move or whatever. So I think it's healthy. As I said, the markets move pretty quickly. Nobody wants this price to spike. If you think about all the vested interests in this industry, the utilities clearly do not want that. The Department of Energy does not want that. Governments do not want that. They want a nice orderly market. And people have to remember that utilities have the benefit of waiting. They can't wait forever, but they have inventories for this exact reason to, basically step aside if the market's too hot or if there's a short-term supply disruption. These inventories basically get them through those periods. And I just get the feeling people are trying not to chase and push the price up because it moved a lot in September, October, November, December.
Do you think the size of this market is partly to blame? It's a small market. There are very few players. You only need a handful of players to sort of dramatically change the price, up or down, quite frankly. And therefore, you are going to continue to see these spikes as we get, whether it be price discovery or supply shocks or all of these things, which have we've seen before. Do you think they'll continue to influence the way that this market plays out?
Yeah, I think that's just a natural outcome of having a fairly small market. If you think about just the total dollar value of uranium produced a year, I mean, we're talking about $15 billion. It's a drop in the bucket compared to, say, the copper market, which is $200 billion a year. You also have uranium, the production of uranium concentrated in a very small number of countries and companies. But the good news is we're finally getting new producers online this year. You've got the Bosses and the Paladins of the world finally getting back into production. At prices of $90 plus, I think it's fair to say that just about every previously producing uranium mine has a chance to come back online if there's any reasonable reserves left. I think it's interesting when you're getting announcements that mines that were in operation 15 years ago are planning to turn back online. It tells you that the price is well above the cost curve of all these brownfield projects. Now, at $90 or $100, are we going to get new greenfield built? That's to be determined. But I think our most important message to investors is that uranium prices are going to have to stay elevated for a very long time because we know the development cycle is very long. We know the CapEx dollars required are very significant. This just can't be you get to 90 and then you shrivel away and you go back to some sub-economic price. That is not going to solve the long-term supply issue that the industry is really trying to to deal with at a time when the world is really trying to pivot back to nuclear energy. So, I focus on the big number and the long-term number, which is, depending on your estimate, somewhere between $1.5 billion to 2.3 billion pounds of uncovered requirements that utilities have to deal with between now and 2040. That's staggering, when you put that into context relative to 150 odd million pounds of primary production right now, and two of the largest uranium producers in the world having some challenges in terms of flexing production up.
Right, and demand is definitely doing its fair share of work. It's doing all the heavy lifting at the moment. I think on the supply side, there's some concerns. Obviously, price is going to help people on paper be economic. I think I was talking to a professor, Daniel's professor, who sort of works in the space, comments in the space, and his concerns over kind of critical minerals or mineral security in North America more broadly is the fact that you kind of got the social component is taking a disproportionately large role in the ability for these companies, even if they could get finance, to be allowed to get into finance. Does that worry you at all in terms of the supply chain? You mentioned a few people have managed to get over the hump there, but not everyone's going to be able to do it so quickly, right?
Yeah, I mean, listen, where I live in Canada, just a few weeks ago, the federal government here announced that they would like to streamline and shorten the environmental permitting process for mining. And that has got to be sweet music to every mining company in the world, that governments are finally openly acknowledging that they're part of the obstacle. Time is a killer. The longer you stretch these processes out and drag out, first production and cash flow, it's just a huge disincentive to investors to get behind these projects. And so governments are realizing the national security, the economic security, the value created of some of these projects, particularly in remote communities where, these are very good, high-paying jobs for people. The fact that it's being acknowledged, and now again, proof is in the pudding. You need to walk the talk here, but at least they're openly acknowledging they're part of the issue. And I think that has been long overdue in terms of the mining industry.
Okay, well, it's good. It's good to hear. Let's say, show me is the next statement, right? What are the other kind of red flags that for you in terms of our ability, the supply's ability to deliver, or at least start to deliver against some of this gap that we're seeing?
Yeah, I just think one of the main challenges with all these industries is labor, and skill and experience labor. I think it's an issue across the whole nuclear fuel and nuclear energy supply chain. We basically stopped building nuclear power plants for 30 odd years. Then you go try to build the first one after a very long, extended period of time, and you find out the knowledge, the expertise, the specialized workers, they're no longer found. And then you have these big cost overruns and budget issues. And that goes everything from upstream in mining to the guys that run the mills and the processing facilities, all the way downstream. So I think that's one of the biggest challenges is finding skilled labor. There are many competing industries for that labor, and it can be a challenge as you're trying to flex up your workforce, particularly in remote communities where you don't have a huge labor pool to draw on.
Do you think that's the only problem? I mean, is money readily available for these companies as and when they need it? Or because you said to me last time out, you'd just been on a US roadshow, European roadshow, you'd met goodness knows how many investment groups new to uranium. They like what they heard, but they're still sort of, I guess, sitting back and waiting to see what they do in terms of deploying capital. And you'd be very, very interested in this with your own the Physical Uranium Trust. What is the likelihood of big money coming into this space and solving problems for miners? And everything downstream from there.
Yeah, I mean, I think it's basically starting at the top and it has to trickle down. We are starting to see that trickle down. And the trickle down is happening because the commodity price is sufficient so that many of these smaller producers, particularly the ones that had previous producing mines, could finally get back online. That's thing one. So I think we've solved for that issue. But as you trickle down even further and you're getting into the greenfield, in many parts of the world, $90 or $100 or $120 uranium, if it's sold, forward on long-term contracts with those kinds of price caps, that makes a lot of uranium mines viable. Now, you still need investors to part with their cash. And I think that even in a bull market, you're going to get people being very picky about the best projects, the best management teams. It's not going to be, all boats get floated, but I think the best projects, the best teams have the best chances of raising the capital, executing against their plans, and delivering real value to shareholders. And I think that's the phase we're in right now. We're still in kind of a phase where the market is getting sorted in terms of which are the best companies going forward.
Okay, and what are the kind of key drivers? Because if I'm looking at you guys, right, you've got a bunch of conditions that you need to operate under before you can buy, and you've bought a lot. Was it £400,000? How does the market need to change? How does the market need to change in the way it operates, functions, before you can take advantage of that? Not precisely the terms of the mechanics of your fund, but in terms of moving forward at pace, where you can maybe start to affect a little bit of change and sentiment in the market yourselves.
Yeah, absolutely. Well, we have a key fundamental test that we have to achieve with the way the Sprott Physical Uranium Trust operates, and that is if it trades at a premium to the previous day net asset value, that gives us the ability to issue new units into the market. And we have not been in such a position for the past several weeks. We were earlier in the year. And until that discount closes, unfortunately, we're kind of on the sidelines. Now, we're sitting on 63.5 million odd pounds. So there's a lot of value in sequestering those pounds. But in terms of getting new cash into the sector, into the fund so that we can deploy it and buy it in spot market, that's something that we have to be patient for. What we have found historically is that even though we can be at a discount for a period of time, it often only takes one piece of news to close that discount, get back into a premium, and get going with more procurement. So, we just have to, be patient and try to focus on the things that we can control, which is why we're so active out in the market. Marketing, but also, just basically educating institutions about how this market works. We still find institutions in very early stages of doing their homework. Do I think that some institutions got interested in the sector and then paused and went, oh, geez, it's just had a big move. Maybe I should wait a bit and watch it. But I do think people are watching it and waiting for, entry points. The other thing I guess I would mention is we've seen a disproportionate share of interest in our junior uranium mining ETF, which speaks to the earlier comment I made about the trickle down effect. And so why is that? Why is interest trickling down to the smaller cap companies? Well, it's because the uranium price achieving these thresholds, I think, disproportionately benefits the smaller cap companies. Why? Because they have a better chance of actually raising capital and moving their projects forward. They largely are unhedged in terms of selling production forward. That's very beneficial in a rising price environment. And utilities are knocking on their door saying, hey, if you want to bid on these RFPs, for future production, you're invited. So obviously there's a bit of a different, scenario there in terms of funding a greenfield operation. But from the juniors I've talked to, they're absolutely being engaged by the utilities. They're being invited to the party. And at the end of the day, they've got to execute and deliver and be able to fulfill the contract needs. But I think investors are connecting all these dots. And it's the reason why we're seeing disproportionate amount of capital go into the junior uranium mining ETF versus the senior uranium mining ETF and even the physical uranium trust, which is obviously 20 times in size. So I think that's a healthy sign of the trickle down happening and also an improved risk-taking appetite amongst investors.
Can I just have a conversation with you about what sort of frustrates you a bit? Because I think people look to you and go, Sprott Physical Uranium Trust is going to solve our problems. It's a big uranium fund. You buy up pounds, you soak up those pounds, and that's the kind of thing I should be looking at. But even you've been sort of paralyzed by the kind of recent market news or lack thereof, or maybe even quite mixed messages in the marketplace by people like maybe Cameco, I think, by being not particularly clear, like Kazatomprom, just volte fast, changing 180 degrees on. We don't have pounds, we have pounds. What are the things that you are looking to? Is it something significant like, enriched uranium supply being sanctioned? Is that the big piece of news that even you, as one of the 800-pound gorillas in the room, is looking for? Or is it always going to be about the market fundamentals of the people producing the pounds into that kind of demand that we're seeing, coming down the line?
Yeah, look, at the end of the day, the supply-demand fundamentals drive everything in the long term. In the short term, we've got a lot of noise. We've got a lot of distractions. Just going back to the ban on Russian enriched uranium, I think that's a very topical thing to cover, because when it passed in the U.S. House in mid-December, that completely took the market by surprise. Nobody thought it was going to pass so quickly, including the utilities. They got kind of freaked out, like, oh my gosh, this is passed. Now, when it went to the Senate and got vetoed by Ted Cruz, everybody took a sigh of relief and said, oh, okay, this isn't imminent. Now, fast forward, we're in the middle of March. What's going on with the bill? I can't even track it anymore in terms of where is it. I do think the psychology of the fuel buyers will change once it is officially law. And so you might think, yes, everyone's known about this for a long time and it's snaking its way through the legislative process, but I do think it will change the psychology of the fuel buyer. It will become more real. The clock is officially ticking. And then you also have the wild card of what can happen between now and 2027. Will there be retaliation? So we do look for those events. We are following those events in Washington to find out where these bills are. They are important in the short term. They help psychology. But the longer term supply demand fundamentals, I would say it only gets better. The issue is it's like looking at a glacier. And if you've ever looked at a glacier, which I have the privilege of doing a few times, it clearly doesn't move. But if you put your time-lapse camera on and then you go back and watch it, it's moving all the time. That's kind of the way I describe the uranium market. It looks like nothing's happening, but it's moving all the time, just very slowly. And when it does have these moments, it obviously can move very quickly. So, I know shareholders right now are a little bit confused around the messages, the price signals, the market signals, but a lot of it's noise. I think also there's been a lot of short-term hot money that's come into the sector over the last couple of months. We've heard from many different institutional trading desks. There were a lot of hedge funds that were putting very short-term oriented trades on, in many cases using options that were playing everything from production, misses in terms of trying to guess whether a company was going to miss production, to uranium mining ETF rebalancings, index arbitrage trades. I think a lot of those guys, they got their fingers burned a little bit. They've kind of flushed out. Our contacts have told us that a lot of those guys quickly unwound and moved on. That's, I think, created a lot of noise and extra volatility the last 3-4 weeks.
On the equity side. But in terms of, here's a question I want to ask you about the fundamentals, right? Because you're saying that's the key driver here. It's not you. It's not the other funds. It's not necessarily any individual utility. It's the fundamentals need to stand up. So if I look at something, you just talked about the politics going on, obviously with the House voting for it, market moves. Now it's got to get through the Senate. I think Republicans potentially, holding things up there. Maybe Trump he seems a little bit more, I'll put it this way, not as anti-Russian as the current the current president. Does it matter if this doesn't, the Senate doesn't vote on it? Does it matter if they vote positively and they vote to, put it into law, and Trump comes along and unpicks it if he gets into power, does it matter? It doesn't seem to change the fundamentals, is my hope. What do you think?
Yeah, I agree wholeheartedly. At the end of the day, whether you hire Rosatom to do your enrichment or you hire your Renko, doesn't matter. You still need the pounds. We're talking about pounds versus services. And so you're just talking about the parts of the fuel cycle that are outsourced to Russia and have been outsourced to Russia for 30 odd years. So it doesn't really fundamentally change anything other than, I think, near term, which supplier you're going to be relying on. And I think everybody in the industry that we've talked to, there is consensus that it is going to pass. It's just a matter of when, not if.
Which is why I want that nuance of, even if it does pass and Trump gets into power and he undoes that, which he's had a record of doing, it doesn't matter.
I don't think it matters. I also think that there are many Republican states in the United States, like Wyoming and Utah, Arizona, Texas, previous producing uranium parts of the country that are very focused on resuscitating the uranium mining industries. And I think, I want to just for the record say that the Biden administration has been incredibly pro-nuclear. It's astonishing to us. I mean, they just passed the multi-billion-dollar bill to support that the transition of nuclear fuel services away from Russia to friendly sources, and everything the Biden administration's done has been incredibly supportive for nuclear energy, from helping to save power stations to all the tax credits to the loan program eligibility. I mean, they've been incredibly. So my main message is that, irrespective of who wins the election in November, I think the federal government support in the United States for nuclear energy will continue.
Good way to end. John, appreciate your thoughts today and insights. Still looks good. Don't worry. We're taking a breather. We'll go again.
Absolutely.